Wednesday, September 13th, market analysis standard. Like, good morning. A few minutes after 10 o'clock California time. It's a little bit after the middle of the trading day. We have a little rally. The S&P 500 is what I always start out with, my favorite index. And I talk about the DIA, the QQQ, NASDAQ, E-mini, of course, and the Russell 2000. So the spider oftentimes being the leader or the best patterns that evolve and signals is what I start talking about. Now, this little rally this morning is not doing any damage to the bigger picture, which I have been talking about now for many weeks. And that is that the middle of June 15, 16, apparently is a shoulder high on a head and shoulder top. The top of the market is a bearish ER sell signal, real time, happened during the day that it developed in overbought conditions in a resistance area. And I started talking about the upcoming, I expect, October lows, which is basically a significant buying opportunity in October. Sometimes they're as profound as incredible last October 13th, the bottom of the bear market, beginning of the bull market, which, of course, we had a bullish ER buy signal at the very bottom. And now we have a sell signal on top so far, which I think is the head of the formation. Down we go a little bit. Very typical, slightly upward slanted neckline, which I just put little white dots or handles on. The rally out of that low, which was oversold, was up to a gap, which it closed very tiny bit of the gap. It needed to go up to 455 and a half, and it only got up to about 453.80. So there's still a gap up there. I do not expect that to be closed for quite a while after October, November, December, something in there. So that's something to be aware of, but I'm not expecting that. Don't think it's likely. If it gets closed, the head and shoulder is going to be very lopsided and probably not a legitimate head and shoulder top anymore. So far, that high on September 1st is just about perfect. Listen to my YouTubes before September 1st. I talked about that next, and that was a Friday, Monday or Tuesday, and I had forgotten Monday was a holiday. So Tuesday could have been, should have been forecasted to be the rally high. It happened on Friday. We dropped down for 4 days, which is now the end of last week, and hit a low and a little bit of a bounce for 2 days. That was 2 days ago, Monday. Yesterday, down pretty good, slightly lower than the previous day's low, closing price lower than the previous day's low. But today we're popping back up again a little bit. We did get slightly lower than yesterday's low early this morning, and now we're seeing some strength. I don't want any more strength, but I have to allow for maybe a closure, a finish of a closure of a gap that was only a couple of days ago. We need to touch 449.17, and 2 days ago the high was 448.77. So 917 is not very much higher than Monday's high. That I could allow for. It should happen if it's going to in the first place or at all, real quick, like maybe today or tomorrow, but it can't last much longer, wait much longer. I don't want this market to be going sideways into next week, and I have to allow maybe for that 49.17 number to get touched and then head south. Anything above 49.17 is a real worrisome situation. Then I think I'm going to be incorrect about this formation, which is developing so far great. Selling short in this ballpark price range right around in here is not necessarily a bad idea, because if it does come down, it's going to come down a lot. The minimum downside objective on this formation is all the way down to 406.5. Wow. That's 41 points, approximately lower. That is also a 50% correction approximately of the long-term bull market from the October lows to the highs we saw in June. So it doesn't kill the bull market. It's only the biggest correction we've seen so far. And actually, it implies that if that is a low next month, October, which is exactly what I'm looking for, then we're going to see October, November, December probably be very, very strong. And if you're an Elliotician, you would start talking about wave number 3 to the upside. Yeah, I'm not an Elliotician. Bob Prichter was my client. I know Bob very well. Good friend. So, and he's the Elliott wave theorist. Now, that's it. Sideways to lower, maybe a little bit more rally up to a very specific spot for 49.17 and down. What about the DIA? What kind of correlations do we have there? Well, it's almost identical. And I want to point out that this little pattern, and let's go back to the spider for just a moment. I don't want to spend too much time on that, but it is my main market. This last shoulder seems to have formed a very small 3-week head and shoulder top by itself. I repeat, the last shoulder is a small head and shoulder top by itself. Here's the first shoulder high, August 24. The top is still the top of the shoulder and the top of the small 3-week pattern also, September 1st. And the high on Monday could be, should be, looks like the last shoulder on a very small 3-week pattern, and down you go. So today's little rally, I'm thinking of stopping in this ballpark price level where it's at right now. Let's go back one more time, and I'm going to show you how it's moving sideways for the most of the morning. So the spider, starting this morning, California time, 6:30, opened, dropped off to minor new lows, came back and has been going sideways ever since approximately 8 o'clock. 2.5 hours. I want it to start breaking down below 446.50. And if that happens, I'm going to be smiling, because then I think there's a very good chance it could slip all the way back down to the low of the day and maybe even keep going. On the other hand, I'm still thinking, that 817 level is a possibility, but that is about all I can expect up here to 449. I'm at 17, that red line right there. So maybe one more pop. Enough time spent on that. I'm going to kind of skip over the cues, so the same thing for all practical purposes. Even the Russell 2000 has all of the same earmarks and makings. You know what I think in general about the stock market indexes. They're starting to go down for a 2 or 3 month head and shoulder top formation into October. That's when I think the downside objective is going to be met, a 50% retracement of the bull market, and then up big time. October lows. I want to show you a little 30-year history here real quick. Every green bar, starting at the bottom of the chart, up to the lows of the prices during the month of October only. So every time you see the green zone, it is October that year. Last year, unbelievable. October 13th, couldn't have asked for something better if I had dreamed it up myself. Previous year, bottom. Previous year, slightly early and at the very end of the month. Looks like October 29th. Previous year, early in the month. Previous year, late in the month. Previous year, not a very profound low at all. It was simply during an uptrend that was very, very steady and consistent. So there was never even a significant downside reaction. Previous year, good, real good. Previous year, fine. Shifting to new Octobers. Bingo. Bingo. Slightly late, not very good, but slightly late was a really good one. November. Good. Slightly early, maybe a day or the first day of October. the object here is look at the way the market acts during October. It is tending to start to rally, if not period, the start of a big rally. This year is 09, good. 08, the beginning of the end of the subprime loan debacle. That huge bear market because of the subprime loan housing loans. So October, we had a turnaround. Actually, it was October 10th. I remember that date very dramatically. Then we're going to go to another earlier few years real quick here. I don't want to spend all day on this. Again, it worked. Again, October during an uptrend. Great bottom. Excellent buying opportunity. Pretty fair, good, but during a strong bull trend. Unbelievably great. The lowest low for years before and years, well, forever afterwards. And that was a low in 2002. Slightly early, late September, and that was 2001. Year 2000, right on time, and we're going to go back to 1993. So this was 2000, 99, great, 98, great, 97, great, 96, okay, 95, a little double bottom in October, so you had two chances. And good, and back to 1993, good. Commodities. We're having a little rally in the E-mini. This is the continuation contract I'm usually dealing with in the futures charts. Same formation. Everything should be the same. Prices are different a little bit, not too much, but it's the way the market's moving that I'm explaining and reading and predicting. So if I get a signal, then you go to the contract month that you want to trade and basically follow the rules regardless of the price, and you're supposed to get the same results, blah, blah, blah. I'm looking for it to turn back down again, ASAP. Explanation point. Next chart is NASDAQ. I haven't filled in the arch marks here or the neckline or the other markings. I just wanted to show you that we still have the same formation. Last shoulder, which is this little head and shoulder by itself, the head of the formation, and the first shoulder high. One comment, I'm going to go back to the E-mini. There's your little neckline. I don't like the fact that so far today, we dropped below the neckline of the 3-week small formation on the opening, or early in the morning before the CPI, I think it was, came out. I don't mention fundamental information very often because I'm not a fundamentalist. Fundamentalist. Anyway, that is not what I was expecting. I was hoping it for to gap down and just stay down and drop even more for a classic downside breakaway gap, but that could still happen for the big formation. And I'm hoping that it closes lower than the neckline of the little one today. In other words, close to today's lows or making new lows, which it does not look like it's doing at the moment. Let's go to the next couple. Here we go with bonds, our correlation situation. Very interesting today. We have a bullish engulfing outside up day, normally a bullish signal, especially if we had been oversold, and we weren't. Now, if this is a good head and shoulder bottom, and I've got my markings, I'll just drop this down a little bit more and move it to the right a little bit more to accommodate, which I didn't want to have to do, but the body parts are still there. And this bullish engulfing is very interesting. It washed out of sell stops, and now maybe the last low of the last shoulder. I thought it had formed in the last couple of days, but this could have been it. If that's true, interest rate futures, this chart's going to go up. That means actual rates are stabilizing and are probably starting to go down, so to speak. And that is bullish for the stock market, which is what I don't want. So I'm thinking this pattern is going to fail and we're going to drop down more and more, and there's no head and shoulder. And the stock market is going to think that means rates are going to go up a little bit more for a little longer than they believe at the moment. and the stock market's going to go down some into October. I hope. That's the picture I'm painting. Down in the bond futures is going to lead to down in the stock market, but up in the bond futures, and it's got a bullish pattern so far that's okay in bonds. But let me show you the 10-year notes in a moment. We dropped into new low ground completely, for the trend completely, in the bond market this morning. 10-year notes, sorry, 10-year notes. Now that kills the head and shoulder bottom. So I will be erasing these markings for the pattern. Okay, what happens if the bullish engulfing is still a good one, and it is a low? We didn't get a buy signal because we didn't get oversold. We came kind of close, but in the 27 area, but it didn't happen. Close, but no cigar. And this could be a turning point because of the bullish engulfing, even though it's not a quote unquote official signal. If that's true, then bonds are going to start to rally also. 10-year notes are just simply have a lower low, and that reversal, the same kind of bullish engulfing. And it's supposed to go up to probably 13.5 minimum. Explanation point. Okay, next. If I don't have any of this thing to say of any consequence on a particular commodity, I'm going to pass it by real quick to shorten this 17.5 minutes almost already YouTube. So overbought conditions, another new high. I think it's about to turn down. I would not ever buy something that's overbought, and in my charts, yellow. I'm looking for sell signals for a downside correction back to about 82-ish. Next. Same kind of commentary here. Overbought, looking for the beginning of a downside correction, not happening quite yet. New high close seems likely. The correction could be, I hope it's down to the blue or red zone here. And then back up again, longer term, looks bullish. Next, natural gas. Not the same at all. Yesterday came up very nicely, closed the gap, and has turned right back down again this morning. This is all very neutral so far, waiting for a significant breakout. It could be down. Next, gold. New low, looks like a new low close for the last couple of weeks. We did get a buy signal on the bottom. Yeah, we got a sell signal on top, and we had a sell signal on top and a sell signal on top. Every time you see red or green, red is a sell signal, green is a buy signal, and you're long with an ER1 the day of the red or green. As to ER3, it needs a retracement to get into the trade, and so sometimes we miss an ER3 trade, but not always. So a little bit bearish here still, looking for a little bit lower levels, but you'll see in a moment a complication with this precious metal story. Silver, same kind of thing, coming back to support, looking for a test of the red zone, just like the last two occasions, last couple of 3 months. So why not again? We got almost the top of the market a couple of weeks ago. We got the top of the market rally in July 20th. We got the bottom, we got the high, second of a double top. We got the first high of a double top. We got the bottom in March, and on. So slightly bearish, a little bit more in silver, but look at this. Platinum has a bullish engulfing yesterday. So we're long in ER1, and we dropped down to the green dots that I mentioned yesterday. And we're filled right about where the market is trading right now, 906.5-ish. I think the green dot is exactly 905.73. So a tiny bit lower than we are at the moment. I certainly wouldn't disagree with being a buyer right now. My initial protective sell stop is going to be just at these yellow dots, 894.40. Of course, this is not an official recommendation. I used to be a broker for 35 years, never a lawsuit or a complaint, and I do not have a license anymore, so I'm John Doe now. I can pretty much say what I want, but I'm still going to be, honest about my opinions and the results, etc. That's always the best policy. So I think this is about ready to head north, and it could be up to this gap closure, which I am about to put my usual rectangle in right about there. and about like that. So I'm looking for a move up to this ballpark area, up to 967-ish. Next, high grade copper. Bought the bottom, sold the top. Last couple of signals have been great. This has come down to some support and turned around 2 days ago, Monday. Yesterday was kind of uneventful. Today is uneventful, an outside trading range, but pretty much unchanged at the moment. No comment. Next, we got the top of the market in soybeans. Came down, got oversold in a support area. Got a buy signal during the process. Not the lowest low, unfortunately. Rallied out of that to an overbought condition on an up gap I talked about the day it happened. And this is another new low since then. I'm looking for a test of this blue zone again. In other words, coming down to 1311 or maybe lower. 1280 could be the stopping point on this next decline in progress, and about halfway through or more. So long term, it's going to have to turn around and start to go back up again out of this blue zone or sooner and start to make some significant new highs long term. Or below the blue zone is bearish. So bouncing out of it is my first thought. Next, bean oil. It already started to bounce out of a support area. Not as profound by any means as the soybeans, but we came down to the red zone here and bounced out of it. And today's a pretty good rally. And it was oversold. My little favorite, one of my favorite combinations, next chart. Minor new low, soybean meal. Probably looking for a little bit more downside correction. Pass on the rest. Next, corn. Yesterday was another new low. It's bouncing off of almost the lowest low for years that was made back in July, over a year ago. Support. But if we close below that red line, this market is probably going to drop a lot more and maybe much faster. Corn. Bearish, intermediate to longer term, short term, next few days, maybe a little rally. Next, wheat has already done all of that, which I think corn is about to do. Wheat got oversold yesterday, so I'm not surprised we're getting a little bounce today. It's going to go up to the red zone, I think, and that would be about 620 and turn right back down again. Live cattle. Seems like it's having some trouble here around the same price levels that it had a bearish engulfing on the previous high. So we caught the top of that, caught the top of the rally there, caught almost the top of the rally here, caught almost the bottom of the market there. Some very good signals lately. I don't know what the heck that's doing. I'm going to erase that one real quick. It shifted downward. That's what happened. So at the moment, looking for it to turn back down again. And cattle, maybe just simply test the low of the trading range in the next week or two. 182-ish. Next chart. Lean hogs stopping at resistance yesterday and this morning. A tiny higher high than yesterday. A tiny new high for about a month and right back down. So we're getting a little reversal here. I think it's going to slip again right back to 80.80 for maybe even 78 right away next week or two. Next, OJ. Well, this is one hell of a long-term bull market. It got a little tired here, very close to overbought conditions, but not quite this time. We did get a couple of, 2 or 3 actually, sell signals. While this may be a top is developing, but I've said that before, and it didn't end up doing anything but going down for maybe a week or two, and then going right back into new high trade prices and getting overbought. Yeah, we got a sell signal there. So I'm slightly bearish at the moment and reserving commentary after I get a little bit of a dip for the remainder of this week, I think. Next chart, cocoa. New high close, but it's overbought again, sort of like OJ. I got to think this could probably pop up for another couple of more days and get even more overbought, but I wouldn't be buying it. I'm looking for a sell signal and a downside retracement, but there's no indication at this point, as far as I can tell, that the long-term trend is changing. Only a minor correction to get out of an overbought condition and then do it again and again and again. That's what bull markets do. Next, coffee, neutral, pass. Next, sugar. Doji inside trading range day, slightly lower tick at the moment. Overbought conditions, probably going to have a little bit more of a downside correction. And we got cotton, our last one. So looking for a little bit more downside correction, probably down to about 83.60. Overbought breakout, didn't hold, false breakout, or what we call a bull trap. And immediately the next day down it went, and another rally, couldn't go any further, still the same resistance area, and started to pull right back down again. And there we go. So thanks. Mañana.